All right. Matt, the mortgage guy. In today's video, I'm going to talk about how as a renter, you missed out on $51,500 so far in 2021. Before I jump into it, if you like straightforward mortgage real estate content from a mortgage broker who's in it all day, every day, talking to real estate agents, talking to consumers, watching the market, all that good stuff, consider subscribing. Share this video with someone who you think might benefit from it. I'll jump right into it. Now, as you know, I'm not somebody who's all sunshine and rainbows, you must buy, renting's dumb, any of that stuff, right? I realize that for some people, renting makes more sense than buying. But for the vast majority of people who are able to buy, now I'll categorize it as that, right? Like not everyone's able to buy, not everyone's in a position to be qualified to make a home purchase, whether that's credit score, whether that's monthly income, whether that's down payment, right? You have to be ready, you have to be able to buy. But when you're in that position, the benefits of buying versus renting are vast, right? And so I want to share some stats because a lot of times people look at, 18% home price appreciation. They say, oh my gosh, things have gotten so much more expensive. It's not affordable to buy anymore. Well, guess what? Have you looked at the rental stats lately? 2021 year to date, rent prices have gone up 16.4%. To put that in context, pre-pandemic, 2017 to 2019, the average rent growth between January and September, 3.4%. So rents are rising rapidly, right? And whether that has to do with inflation, whether this has to do with other economic factors, it doesn't really matter. All that matters is that as a renter, your rents are going up on average 16.4% just the first 9 or 10 months of this year. So what does that mean for you? What should you do? What advice can I give you? This is an infographic that scares the heck out of me, right? As a home buyer, when you're willing and able, one of the benefits of buying a home, when you buy it on a 30-year fixed rate mortgage that never changes, this graph stops, right? You can't see yearly increases. It levels out, right? You've got a mortgage payment of $21.25 a month. It stays $21.25 a month. Granted, homeowners insurance can raise slightly. Property taxes can raise slightly. But these are slight increases compared to another $100, $150, $200 a month being added to rent, which I'm seeing all across California. This 16.4%, I see it on a daily basis. And not only do I hear from clients that say, my rent's gone from $1,600 to $2,350 in the last 4 years, but some of them, after all those rent increases and just putting up with it, their landlord says, all right, you got 30 days or 60 days to move. We're selling this place. Good luck finding a new one. So as I stated in the beginning, the benefit of home ownership is not just that you get to fix and lock your payment in, right? You're not subject to getting kicked out of your house. You're not subject to rent increases, but also, the benefit of home ownership is the equity that you gain, right? You buy a place for $400,000, it goes up in value by 12 or 13%, and now it's worth $450,000. That's a $50,000 gain in equity. Whether you sell it, whether you hold on to it, no matter what, like you've got that $50,000 in equity. And year after year, it's like a forced savings account. If you bought it at $400 and you put 5% down, and so you borrowed $380,000, over time, in a year you might owe $372, and then the next year you owe $363, and the year after that you owe $351. Whatever those numbers are, you're paying that mortgage balance down. And over time, it's worth $525 and you owe $325. Now you've got $200,000 in equity. Either you sell it, pay the professionals that help you and you net that benefit and put it in your pocket, or pay off some credit card debt, or move to Tennessee, whatever the case, you're gaining equity over time. And it's no secret that when you look at the net worth of a homeowner versus a renter, I can't remember what the stat is offhand. I made a past video about it, but it's glaring, the difference, right? It's hundreds of thousands of dollars in difference. It's because of this reason. It's basically a forced savings account. It's going up in value and you're paying the balance down. So you're gaining equity year after year over time. Does it go up 15% every year? No. But do you pay it down every single year? And over time, you're going to see 4 or 5% home price appreciation? Yes. So obviously a fan of home ownership. I see many people win owning real estate. It's not for everybody. If you're not in a position to buy, no big deal. Renting might be the only option for you right now, but sometime in the future. And for most people I talk to, I want it to be the relatively near future, and that's maybe 2 or 3 years out for some people that have to get back on their feet, pay off some debt, work on their credit, get a stable job in place for a couple of years. But whatever the case, create a plan. Know that over time, the benefits of home ownership are going to outweigh renting. One of the reasons is this. Another reason is the equity piece, like I talked about. Missing out on $51,500. That was a title of an article I read. It doesn't have to be dramatic, but over time, you're going to see the benefits to your net worth by owning a home. If you have any questions at all on how to get started, advice on home ownership, how to get pre-approved, please reach out to me and my team. We're more than happy to help. Go to greatmortgagebroker.com, fill out those 6 quick questions. We will contact you within 24 hours. We'll connect you with somebody who can give you good advice, get you started on the application, whatever the case may be. We're here to help. We want to help. Thanks for watching. Hope you enjoyed. Until next time, we gonna see.